Welcome to the March 7th, 2022 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman. Fast-paced tour of the global financial markets, impact of the Ukrainian siege. I would urge you also to go to NetWorthRadio.com. We've posted an interview on Ukrainian aid, a North Texas-based couple. She's from Ukraine, he's from Poland. They're making a huge difference, exercising global leadership from right here in North Texas, and it covers how you can help with humanitarian aid to Ukraine when they need it the most. We're going to walk through a fast-paced tour. I'm Spencer McGowan, President, McGowan Group Asset Management, a team of 10 serving affluent clients from right here at the Crescent in Dallas. It's a pleasure to be with you. This update is meant to take our clients to the next level in understanding, yes, the impact of Ukraine, but also the impact on global financial markets and what portfolio adjustments may be warranted by recent changes. This is the Dow Jones Industrial Average. I decided to go back 1 year on a few of these charts this week. 1 year, the Dow is still up 10%, down year to date by about 8%, and so that tells you relatively where we are. You can see the impacts here. The January implosion, a rebound, and then of course the Ukraine decline from near 36,000 to a low that was near 32,000. We've settled back to not far from these little flash points around 33,000. Does that hold? It'll depend in some part on the outcomes from the Ukrainian siege. This shows us what's happened to Russia. Now, the sanctions have huge impact for the commodity markets around the world. This is Russia being decimated and isolated as a pariah. The entire free West has united with sanctions, and 70% of Russian oil is not being taken at this point. That's a huge impact. The ruble has gone to 110 officially, but you can't get dollars inside of Russia even at any price of rubles right now. So boom, you've had 80% loss. The NASDAQ and the NYSE said, we won't trade Russian stocks, so they delisted them. That is total isolation. The size of the Russian economy, you'll see, purchasing power parity was about 3.8 trillion out of 125 trillion. Ukraine was about $500 billion. If you look at the impact on what that means, about 1% of global GDP is instantly removed by the conflict. Now, here's the impact on oil. This week, oil tops $116 a barrel. That's significant because it's the highest since 2008. It did settle back down to around 112. What does it mean? It translates to $4 gasoline or higher here in the United States, and it of course underscores the value of the energy sector right now, which has shown double-digit gains for the year, even though the S&P 500 is down near 10%. There is a technology implosion that started back in November that has the NASDAQ 100 down 16% so far this year. So the glamour of the technology stocks and the popular stocks absolutely decimated at this point. Now, what's working? Well, the 1 year total return from energy infrastructure is actually over 30%. This gives us a clue on portfolio adjustments for inflation going forward. Give you a couple of other pieces. Right now, some of our better gains are in medical dividend companies. This is a big shift away from growth stocks that were overpriced into value stocks that are getting a lot of attention. So here in this wheat, what you see is an increase of a near double for wheat prices, and it happened very instantaneously, Ukraine is actually a big exporter of wheat. The price of a loaf of bread in the UK already reported up 20% just this week. Now, we're going to talk about the Fed change in posture and what's happened, because this tells us something. You had the T-bill, that's the 90-day Treasury bill. That's considered the basis for your money market yield. With the Fed change in posture, it went to 0.4%. At least you were getting something now on a money market. It's come back to about 0.3%. This right here is a flight to safety, which pushed the yield back down a bit. It also says that the Federal Reserve may be rethinking the aggressive pace for rate increases due to inflation. And I've got an important slide on inflation, which we'll get to. All right, this is the 10-year Treasury note. The yield went over 2%, back down to 1.73. The symbol on the 10-year Treasury is TNX. Why is that important? The 10-year Treasury is a flashpoint. If you see a massive move into Treasuries, this yield would drop from its current 1.7%. TNX is a symbol we're watching because it will likely signal, if it dropped substantially, it's signaling a geopolitical escalation by Russia, and that's of course what is on everybody's mind right now. TNX is our flashpoint symbol to say we've got something in terms of an escalation. All right, what is this? This is 1978 through 1987, the biggest inflation that the U.S. has seen in modern history. And this is the S&P 500, the white graph right here. I wanted to talk about a few impacts. Notice a reasonably steady increase in the overall level for 2 years that the inflation rate went up. You had the correction essentially here, and there are two corrections in this. This is kind of a long drawdown of about a third. That's a drawdown of about a third. So not a happy market. However, you did rally for 2 years as inflation went from 6 to 15%. As the Fed tightened in 1980 and 81, you put a damper on equity, right? It kept it from going up. What happened here? 1982, tax cuts and deregulation. By 1986, the GDP growth was 6%, and you can see inflation moderated back down, even in that cycle. So, the important lesson built into that chart is it's not necessarily true that stocks go down as the Fed tightens. Here, this was the most aggressive tightening in history and the most aggressive inflation. All right, purchasing power parity. This is one of the CIA's measure. This is from CIA Factbook. Global economy is 125 trillion. What's the immediate impact? Well, Russia makes up about 3% of the world GDP. About half of that is probably gone. That may be a 1.5% impact on GDP. Ukraine was a $500 billion equivalent, 0.4%. So you've had an impact between 1 and 2% of global GDP instantaneously gone. So slowing growth and overall growth in the world actually hampered immediately by this. The question going forward, with the slowing growth, what does portfolio strategy looks like? Yield, value, and careful asset selection for things that we would be happy to own 5 years from now. There may be opportunities for tactical safety to be put to work, and we will keep you posted right here at YouTube McGowan Group when you subscribe. If there's fast breaking news, we're going to be right back and you'll get the alert if you're subscribed. Be sure to go to networthradio.com for this week's interview on how people right here in North Texas can get direct aid to Ukrainians now. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.